Kumar Modi, the whole-time director and executive director of finance at Macrotech Developers, joining in the show right now. Sushil, great to have you on ET now. Congratulations, firstly. You've reported a very strong number in the first quarter. Tell me, what were the main growth drivers behind this, and whether this kind of a number in terms of your top-line growth as well as profitability, does it look sustainable to you?
Morning, Aisha. When we look at Lodha performance, I think we should not lose foresight of what we delivered last 5 years and concentrating disproportionately only on this quarter. In last 5 years, we have grown our pre-sales 28%. Our profit has grown by 6 times, from 500 crore in last financial year to 3,430 odd crores. So this quarter is nothing but just a continuation, but equally, it's not that our profit stands for or what we are underwriting for ourselves as part.
Well, we seem to have snapped that line, or I think is Sushil back with us? Okay, we'll just get back to him. But yes, Lodha has reported a consistently strong set. It was no different this quarter around as well. They've retained their FY27 guidance. The collections are clearly driving the strong revenue growth as well. But yes, Sushil is back with us. Sushil, you were telling us the context of 5 consecutive years of strong performance, and it was no different in this previous quarter too.
Yes, so basically, after having delivered what we delivered, the 6 times profit growth, what we are underwriting from here onwards is to grow our profit at 20% CAGR for the medium to long term. And this is what you are going to see this year, thereby meaning we are guiding for profit, achieving profit of around 4,100 odd crore. 1/3 of that, in a way, is already achieved in Q1. But that doesn't mean that every quarter will be like the one which is this quarter. The one quarter should not get annualized. So we stand for delivering 20% growth while in parallel deleveraging and making our development business net debt, negative, means cash positive company. So that's what you are going to see. And this quarter, alongside, we reduce our debt by 450 odd crores while growing, and there.
Apologies for that bad connection, but can you hear me clearly?
Yes, I can.
Okay, great. Let's move on and let's now talk about, what lies ahead, Sushil, for Lodha. Because only one of your launches is what one saw closing in Q1. The pre-sales saw a minor growth of about 4%, and you're now targeting a pre-sales of about 5,000 crore rupees in Q2. Give us some more color on what are the major projects which you're planning for Q2 and what exactly is the visibility going forward?
So hi, Aisha. So for a company of our size, specific projects become somewhat less relevant because we run around 40 odd projects across 3 cities and potentially getting started in the 4th city now this financial year, which is NCR. The important point is we have 25,000 crore worth of inventory in the pipeline to be launched in this financial year. And this quarter in itself, where the pre-sales growth was 4%, thereby need to be seen in the context where we opted for consciously not launching any product, anything significant, and which is where generally when 30% of our sales comes from the newly launched project was missing somewhat. So thereby, on the back of the launches that is planned, we are confident of delivering our guidance that we had given 24,000 crore of pre-sales in this financial year.
Hi, morning. Give us a sense of the data center, monetization that's happening with respect to land. Can you give us an idea of how much of that will come in this year?
So that's one of the most important development in the Lodha's trajectory, which is started in particular with more focus a year back, wherein we at our Navi Mumbai Palava location, where we have 3 gigawatt of IT power data center capacity on a land of around 660 odd acres, which we started monetizing sometime like 15 months back, wherein we first sold the land to AWS and then subsequently to STT. In this quarter, what you have seen is the another validation wherein we sold land around 35 odd acres at a price point of 42 crore per acre to Digital Edge, a joint venture of Digital Edge Singapore and NIF, so which indicates how significant and an important location this Navi Mumbai Palava is within our country for the construction of data center. And on the top of it, now, if you lay over the fact that we are going to build 1 gigawatt data center capacity ourselves to generate the rental income and substantially boost our rental income from 300 odd crore, which was there last financial year, by around 10x in next 6 years to around 3,000 crore, wherein 2,000 crore will be contributed by the data center alone. So this one piece of business in terms of annuity income, which was somewhat missing in the Lodha trajectory, now becomes absolutely real. And this data center foray thereby is going to make a significant change in the Lodha's trajectory going forward.
This margin picture that you are actually forecasting right now, your EBITDA margin target range of 32 to 34%, you're confident of achieving that?
Aisha, that's the interesting point. Our EBITDA margin, we have always said it will be 30% plus. And year on year, there is all the right reasons for this to expand. When the price growth in our product, we see more like 5, 6, 7%, ensuring the affordability remains robust at the end of the consumer. And on the other hand, on the cost side, the inflation impact that we have seen over 4 year period on a CAGR basis is more like 1, 2, 3% at best. So yes, we are absolutely confident of delivering the margin threshold that we are talking.
Sushil, I was looking at some of the data. 530 acres of land left to be monetized for data center. How much of that you will be using for self-use? As you said, you are setting a 1 gigawatt of data center capacity yourself for that annuity income that you are seeing by FY30. What is the kind of potential of that land parcel is there? Because you mentioned about 42 crores per acre valuation for the land. Is land prices increasing in that area?
Land prices for data center obviously is increasing, and in particular, if you have got a phenomenal infrastructure which is prerequisite for developing data center, which is power and water in place, then yes, this is the need of the hour globally, as we all know, where hyperscalers are spending perhaps $1 trillion a year for the foreseeable future. In our 530 odd acres that is left right now, around 90 odd acres we will use self for constructing 1 gigawatt data center and leasing it to some of the hyperscaler, which we are confident of achieving the first milestone in the journey in this financial year itself. And the another 140 odd acres we have identified to be selling and monetizing for the data center purpose, where we aim to realize on an average 60 crore per acre, means the price point will keep increasing, and thereby potentially we will get 9,000 crore plus in next 4 to 5 years by selling 140 odd acres more, which we will use entirely for financing our 1 gigawatt capacity that we want to build, which will have a capex outlay of around 11,000 crore ballpark. So, which means we are not going to expose our balance sheet and effectively end up in matching the capital outlay along with the inflow coming from the land sale for the data center. And subsequently, it will still leave another 300 odd acres on which we will be working towards augmenting the power supply beyond 3 gigawatt, but that's over longer horizon.
So if I were to ask you, what other than data centers, because Bangalore has started very well for you, Sushil, NCR launches as well are scheduled for the second half. Which market do you believe can become your second largest contributor after MMR?
This is this is an important piece that we keep deliberating internally, that shall we be identifying the one who should become the second? We would rather love to have the competition amongst all these markets, be it Bangalore, Pune or NCR, and serve for solving for the underwriting that we are doing, which is 20% pad growth. So the point that you are mentioning is the strength of Lodha, that Lodha's ability to grow in multiple markets suggests that perhaps we can grow even 20% plus in terms of our pad growth. But for the lack of, for knowing that the execution is far more challenging in our industry, we are not getting into the bandwagon of wanting to grow our pre-sales too quick, and rather focus on delivering PAT growth of 20%, where the ability to grow in any case is humongous. Pick any city that you want beyond MMR as well.
And how do you look at uh, prices in MMR region? Are they stabilizing at this point in time, or do you see an increase in price also coming in? There's a lot of redevelopment happening in this region as well. Is that impacting demand and supply and the pricing?
See, the fundamental strength of our industry is we deal in a product that is supposed to be and is always accretive in prices, because that's an asset class, immovable property, which is always being accretive. And accretive is a virtue both from the standpoint of the consumer, so is from the standpoint of the developers. So what we are seeing, and as a matter of strategy, has adopted the our pillar of foundation in the business chain is to ensure that the price growth is far more reasonable, which is somewhat below the salary growth in the country, and which is where we said 5, 6, 7%. If the salary growth is 8 to 10% in the country, and that ensures the product is accretive but not denting the affordability in the hands of the consumer. And towards that, in the very first quarter this year, you have seen 3% price growth we have achieved across our portfolio.
Right. Okay, Sushil, congratulations once again. And as always, great speaking with you. What a buzzer your stock is, almost holding up 7% as we speak.
Thank you. Thanks, Aisha.